Urmil, what would your key takeaway be? I mean, I'm just looking at the various components, the fact that there is an EBIT margin expansion, the fact that the volume growth has been dollar revenue growth slightly off, and the fact that Northern America it's been showing an increasing trend for 2 quarters in a row now from what they did in 2 quarters ago to where they are right now. NA, the largest geography, over 50%, is contributing well. Just before I get to Mayuresh, Urmil, this question is to you.
Yeah, so most of the points which you mentioned are TCS has performed broadly in line with our expectations. It's good to see that despite there being some concerns over the US elections this year, they are still being able to deliver good growth in the US despite their large presence over there. And we would like to also keep in mind that Europe is a market where they are still looking at geographies to grow their presence, and they are increasing their market share. So when we actually look at the impact of Brexit, we will also need to keep that in mind because that has been an area of good growth in the last couple of years.
Yeah, indeed. Mayuresh, Joshi from Angel Broking as well joins in. Mayuresh, what have been your first takeaways? It seems like an inline set, but would you say there are any stark disappointments or pleasant surprises there?
Good evening, Aisha. The dollar revenue growth probably a little bit lesser than what we had anticipated. But largely, I think if you leave aside the PAT figure, which is above most analysts' expectations, numbers seem to be in line. Again, largely, I think I will just reiterate all the points that the analysts have probably stated. And I think the management commentary of what you are citing on the screen right now seems to be very, very robust. It's sounding very, very encouraging. But I think if that commentary lays stress on the point of the acceleration that they've shown in adoption of digital technologies, which contributes almost 15.5%, the adoption of cloud platforms in a fast-paced manner, that will be a key positive. Then the resilience probably in key markets in North America, what probably happens on the commentary around continental Europe is going to be extremely important. BFSI accounts for almost 41%. So any encouraging trend in terms of cloud.
Okay, I think Sandeep Agarwal of Edelweiss is also with us. And Sandeep, I think most experts on board, we've 3 or 4 of them with us, believe that this is pretty much in line with estimates and the run rate or the trajectory continues. What are your initial thoughts?
So see, I see these results in 2 parts, and first part is clearly on the revenue front. I think there is a miss in the revenue front again this quarter, and this has been continuing for last several quarters now. So to that extent, I am little bit disappointed, because if you see historically, TCS is always a first half driven company, and a weak set of number in first quarter puts lot of pressure on the second quarter, and after the third and fourth quarter, because of furloughs and seasonality in the industry, is always weaker. So I don't know how we will be able to even expect 10% plus growth. So I think 10% or below 10% is what will be the number. So on that front, I am not very excited. But on the margin front, there is definitely a very good execution and very good management of margin this quarter. The numbers are far better than what we were expecting. We were expecting 170 basis point kind of decline. It has declined by 100 basis point only in spite of wage hike and visa cost. Another thing which I had limited access to the data by the time this interview started, but another thing which was encouraging was the attrition rate has fallen by almost 2% on a quarter-on-quarter basis, which is a very good sign. But we have to also keep in mind that this is the quarter when generally the attrition rate falls, so we have to see it on a relative parameter once other results come. Overall, my view remains same, that there is a margin, there is a surprise, positive surprise, and revenue again there is a little bit of disappointed. So it is a mixed set of result in my view. We would have been very happy if there would have been a beat on the revenue front. Margins, obviously you have a lot of time to recover, and we have to also see the finer details of the margin, how much benefit has come from currency and other parts. That's my view.
Yeah, indeed. In fact, I'm just going to quickly go across to Sunita as well and get a summation really of how the earnings have stacked up as opposed to, Sunita, the ET Now estimates.
Well, as far as dollar revenue growth is concerned, it's slightly or tad below our expectation. But if you look at the revenue growth in rupee terms or rupee terms is in line with the expectations. Margins, EBIT margins is a beat. We were expecting a 150 basis point decline, but the margins have only declined by 100 basis points. So clearly they have able to manage the margins much better. But we'll have to watch out for what basically has gone into this management, whether this is purely on the currency fluctuation that this benefit has come, or there has been a benefit coming from with the digital contributing much higher now, so the margin improvement coming on that account, or whether the utilization rates have improved in this quarter. So we'll have to see what basically is the split of how this margin management has been done. As far as net profit is concerned, that's also slightly higher than expected. North America has grown at 2.5% sequentially, and BFSI has grown at 1.7%. UK and continental Europe continues to perform very well in this quarter as well, but it's really the commentary how the demand is likely to be impacted going forward as we see Brexit being rolled out, Brexit happening, and whether there will be an impact on BFSI demand, whether the management expects any kind of IT spend freeze, especially the discretionary spend. So that will be watched very closely, but for now the management commentary has been very, very strong. If you watch out for the management commentary, the CFO's comment says that they're looking to strengthen competitive position across key markets, so basically pointing out that they're looking to strengthen, they're improving their market share, so that can help them overcome the uncertainty that has been that is likely to be there, which will because in Europe or the BFSI space.
Yeah, indeed. Okay, Sunita, I'm going to let you go on that note. And perhaps, get in detailed number crunching as well in just minutes from now. What is going to be interesting, of course, is going to be what the stock actually does come tomorrow. Well, remember, there's another big one, that's Infy, which is going to come out hopefully pre-market hours itself. So two of these big boys from the IT universe are going to react to the numbers, and just maybe, Infy, if it's like extremely a positive surprise or a starkly negative surprise, is going to have a rub off perhaps in TCS, who knows. But Sandeep Sabharwal, just purely going by the numbers that TCS has delivered, 25.21 is where the stock shut shop today, about a 1% uptick. Do you sense that the momentum could sustain in the stock, or do you think at best it's going to be flattish because the numbers are in line?
I think that will largely depend on how the conference call goes. And if the conference call goes in line with what the management commentary as they have come out with, then I think it opens up a couple of percentage point upside for the stock in the near term, and depending on how things go, a bigger upside over the next few months.
Set for Infosys, if it can deliver, to be able to surprise yet again. The only quibble is that Infosys has come out and said mid-quarter that there could be an issue or two with how the quarter and maybe the rest of the year shapes up. So that is that problem. So same question to all our experts, and let me get Sandeep Agarwal first. And Sandeep, could there be visibility issues? I mean, for Infosys to change the tune midway through a quarter points to the fact that maybe IT companies don't have the visibility. Do you think TCS in their commentary will be able to assure analysts and investors that FY17 will remain as is or will look slightly bleak? I mean, would they have that visibility to be able to do that?
No, I don't think it will happen so quickly. So even if you see post-Lehman crisis, it was almost 3 to 4 quarters before which visibility came. So I honestly don't believe that visibility will come so fast to make a statement on either side.
Okay, so that's the view from Edelweiss Financial Services. Urmil, what would your thoughts be? I mean, just the fact that, we've discussed about what is to be watched out in the commentary, and it is about what they say about the Brexit situation, so on and so forth. Do you think they'll be able to have those convincing answers with regards to these theories? Because as I was saying, Infy changed it midway through a quarter. Maybe the IT companies don't really have the visibility to be able to confidently guide for the next 12 months.
Yeah, so there is lack of clarity as to what is going to be the exact impact and what are the steps the clients would be taking, and thus the impact on the contracts which the IT companies would have. So yes, it could take easily more than couple of quarters for things to stabilize. but we also need to keep in mind as to specifically for TCS, as to last year Diligenta had a negative impact to them, and if it is stabilizing in Q1, and also would like to understand how is Japan faring in this quarter, and if it is expected to stabilize, it could provide some cushion. But overall, yes, it's the uncertainty is has only increased as we are getting into FY17.
Right. Rahul, what's been your take on, while the near-term visibility may be all okay, we're of course going to hear out from the TCS management, only then take a call. But does it seem like long-term the picture is still pretty sketchy?
Yeah, I think growth rate in general and the expectation of the annual growth rate have definitely come off from close to 15% to 10-12%, which is a new reality, at least for short to medium term, and we don't see any challenge why TCS or any of its peers would be finding it difficult to achieve. So 10-12% growth is what we expect on a medium term constant currency basis, and it looks good to achieve on that path.
Okay, let's start winding down this discussion then. Of course, the big one is going to be at 6 p.m. when N. Chandrasekharan is going to be speaking with us exclusively and first right here on ET Now. And we're going to hear out from him before the conference call what really is the management commentary, and then really take a call on what sort of estimates to gather from TCS and the trajectory thereof. But Rahul, what is it that you're going to look out for from the management commentary for you to actually change your outlook a little upwards on TCS from here onwards?
In fact, we have a better view on a relative basis on TCS even now, given fact that the expectation or the risk reward is favorable for TCS versus Infosys. If you see, the stock has been flat for last 2 years at 2450, 2480, even at 2520. This is a kind of a 2-year kind of a stagnant price, where the earnings and expectation have moved by 20-25%. So that is the kind of derating that has already happened, and going forward I think it's only going to add in terms of confidence with the kind of number they are going to deliver, and the differential gap again with the Infosys is going to narrow, and it may see a better move from now. If you see, just case in point, the growth for continental Europe and even UK in this quarter is more than the company average growth for the quarter. So I think it is more of a client in those markets rather than taking a blanket view, and so Brexit is not going to add incremental worry for TCS, and that's why we look extremely positive on TCS here on.
Great. By the way, in moments from now, we'll be talking about the BOE decision as well. But let's start, getting those final thoughts, as Aisha said. Sandeep Agrawal, your closing comments. What would you expect TCS to do? And if Infosys delivers and doesn't caution, would it be Infosys over TCS or not quite?
So it is very short-term duration call which you are asking me, which I am not very good at. And my view remains same, that we have a long-term view of 2 to 3 years, and we believe that Infosys will outperform over that period. Tomorrow we have to see what Infosys delivers. So there could be momentary ups and downs in the stocks, but in long term I think Infosys has significant margin levers, has significant growth drivers, and they are much better positioned in few of the markets and the technologies. So we obviously prefer Infosys over TCS, and I maintain that view.
Okay, Urmil, by the way, thanks so much for that, for joining in today and giving us your thoughts. Urmil, your closing comments on the same?
Yeah, so I would not like to comment on absolute short-term stock reaction, but if Infi does not give a lot of caution in Q1 results, that would mean that the FY17 it would outperform the industry growth rate, and we have Infi as a topic in line with what even the consensus has. So we prefer Infi over TCS, over the medium to long term.
Rahul, what's your take on the stock then?
I think 6 month to 12 month we have TCS over Infosys as our preferred bet. So we are little contrary in that way.
Okay, Sandeep Sabharwal, stay on. Urmil, Rahul, thanks so much for joining in today and giving us your thoughts and your perspectives. Sandeep Sabharwal, now the discussion with you. A couple of points. Firstly, on TCS versus Infosys. Everybody's talking about giving a long-term call. The outlook for the IT companies, to my mind, seems to be so clouded that they have become kind of 18-month odd plays. You buy a stock, maybe it outperforms the other for the ensuing 12 to 15 months, and then the other kind of takes over. It's happened with HCL Tech in the past, then happened with TCS. In the last 18 months, it's probably been Infosys fair and square. Is it possible to give 3-year views on the IT companies right now?
No, I don't think so. I don't think that we can take a long-term view at this stage. But I think what TCS results has done is it's put a downside protection to the stock. And if Infosys does something similar, that puts a downside protection. Markets have been bullish. Markets are likely to move up further. I think these stocks will now start to participate. That doesn't mean I am going to be buying into these stocks, because I think there are other better plays like PSU banks and some infrastructure companies to play in the current rally. So I'm playing those. But for people who want diversification in the sense of having IT stocks in their portfolio, I think they could see some upsides over the next 6 months.
Okay, Sandeep, let you go on that note. Thanks much for joining in with your analysis and TCS's numbers. Largely an inline set, really. Of course, we're going to be hearing out from the management as well. Within minutes from now, we're going to be cutting across to the press conference. But more importantly, before the conference call with the analysts, the MD and CEO of TCS and Chandrasekaran speaks with us exclusively first on ET Now. So hear out 6 p.m. his views right here on ET Now.